Yeah, there's been a real shift in sentiment over the past week and a half. And the more hawkish RBA, which saw that Aussie push up to 74.20, the sugar effect from that has largely worn off, partly due to the fact we saw a good, robust jobs data on Friday night. We've seen a chorus of Fed officials singing from the same hymn sheet here. They are saying that the conditions necessary to meet their objectives for tapering is approaching before and after that jobs data. So that was last week before the jobs data. And again this week. Not only that, the Aussie is also up against some other headwinds. Firstly, we've seen a pretty big fall in iron ore from around $220 per tonne back to around $170 per tonne. So that is waning on sentiment as well. We are seeing a retracement in some of the big mining stocks. FMG, for example, is off around 15%. Also, some of the domestic data is we're starting to see the impact of the lockdowns on that domestic data in Australia. For example, the NAB business confidence, it was up at 36 at record highs in May, and here we are back around 11 in July. So things are softening as well domestically, which isn't unexpected. What it means for the Aussie dollar, well, as we noted, it did push up at the very start of last week after the RBA, after the more hawkish RBA, got up to around 74.20, 74.27-ish, which we've been highlighting as a really key level going forward for the Aussie dollar. Now, it rejected that level quite significantly on Friday after the stronger jobs data, and it's followed through to the downside again today following that weaker data that we've just mentioned here in Australia. It leaves the Aussie vulnerable to a retest of that 72.89 low. I think it does test that low now. It has rejected the top side. It's now time to have a look at what lies below. So the first level we have in mind is that 72.89 low. And then we can start to look towards those. I think 72 will be a level, but certainly back towards 70 cents in the medium term is not unattainable. So, yeah, look, I can see why the forecasters are now starting to swing from probably 80, 85 cents down towards 70 cents. There does seem to be good reason for that. Of course, there is a lot of uncertainty around, and we've seen that regularly over the past 2 to 3 months. It could change again very quickly, Cara, but at the moment, the path of least resistance looks lower, and I think we need to have a look at what's below that 72.89 low.